Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5 in plain, everyday language. I'm your host at AlgoBot, and today we're studying an expert advisor called Momentum Thrust Continuation. This is a trend-following, momentum-based strategy that leans on two familiar tools: an exponential moving average to read the trend, and the average true range to measure volatility. Over the next few minutes, you'll learn exactly how it defines a strong move, when it decides to join that move, and how it manages its exits. Remember, this is educational information only and not financial advice. So what does momentum thrust continuation actually do? At its heart, this expert advisor is built on a simple idea. A trend is only worth joining when price is moving with genuine conviction. Plenty of strategies try to buy any dip or sell any bounce. This one is more selective. It waits for the market to push decisively in the direction of the broader trend before it considers taking a position. To judge the trend, the strategy uses an exponential moving average, or EMA, with a default period of 50 bars. When price is trading above that moving average, the environment is considered bullish. When price is below it, the environment is considered bearish. That's the first filter. The second ingredient is momentum, which the strategy defines very concretely as the change in price over a set number of bars, 4 bars by default. A large change means the market is moving quickly, a small change means it's drifting. But raw momentum on its own can be misleading, because a big move on a quiet day is different from a big move on a wild day. That's where the average true range, or ATR, comes in. ATR measures how much the market has typically been moving, and the strategy compares momentum against a multiple of ATR to decide whether the push is truly significant. This approach is designed with faster-moving instruments in mind, such as GBPJPY or gold on the 15-minute chart, though it can be applied to any symbol and time frame. It's aimed at traders who are curious about trend continuation logic and want to study how momentum and volatility can work together. As always, this is for educational purposes only. Let's walk through the exact logic step by step. First, timing. The strategy makes decisions only on completed bars, and it acts just once per bar. When a fresh candle begins to form, the previous candle becomes final, and that freshly closed bar is what the strategy examines. This avoids reacting to the noise of a still-forming candle. Now, the long, or buy setup. 3 conditions must all be true at the same time. Condition 1. The closing price of that signal bar must be above the 50-period EMA, confirming an uptrend. Condition 2. Momentum must be positive and large enough. The strategy takes the current close, subtracts the close from 4 bars earlier, and checks whether that difference is at least the thrust threshold, which is thrust multiple multiplied by ATR. With a default multiplier of 1.5, the market must have climbed by at least 1.5 times its recent average true range. Condition 3. The signal bar itself must close bullish, meaning its close is above its open. When all 3 line up, an uptrend, a strong upward push, and a bullish bar, the strategy signals a buy. The short, or sell, setup is the mirror image. Price must be below the EMA, confirming a downtrend. The downward momentum, measured as the older close minus the current close, must meet or exceed that same thrust threshold. And the signal bar must close bearish, with its close below its open. When those align, the strategy signals a sell. Now, risk management. Every position is protected the moment it opens. For a buy, the stop loss is placed below the entry at a distance of SlAtrMult multiple times ATR, 2 times ATR by default, and the take profit is placed above the entry at TpAtrMult multiple times ATR, which defaults to 3 times ATR. For a sell, those distances simply flip to the other side. Because the take profit distance is larger than the stop distance, the default setup aims for a reward that is greater than the risk on each trade. The strategy also holds only 1 position per magic number at a time, so it won't stack trade on top of trade, and it includes an optional spread guard that can skip entries when the spread is too wide. Keep in mind, trading always involves risk, and losses are a normal part of any strategy. Let's look at the actual MetaTrader 5 code that powers this. At the top, you can see the input parameters, which are the dials you can adjust in the strategy tester. TrendPeriod sets the EMA length at 50. Momentum loopback is 4, the number of bars used to measure the move. ATR period is 14. Thrust multiple is 1.5. The multiple of ATR the move must exceed. SlATR multiple and TpAtrMult multiple at 2 and 3 control the stop loss and take profit distances. There's also a fixed lot size, an optional spread guard, and a magic number that tags the strategy's own trades. Below the inputs, you can see momentum being calculated as the last close minus the older close, and the thrust threshold being set as thrust multiple times ATR. Then come the two signals. The buy condition, long sig, is true when the last close is above the EMA, when momentum is greater than or equal to the thrust, and when the signal bar is bullish. When that's the case, the code reads the current ask price, sets the stop loss 2 ATR below it, sets the take profit 3 ATR above it, and calls trade.buy to open the position. The sell condition, short sig, is the exact opposite. Price below the EMA, negative momentum meeting the thrust, and a bearish bar. It reads the bid price, places the stop above and the target below, and calls trade.sell. Everything is symmetrical between the two sides. This walkthrough is for educational purposes only. Now let's bring it all together on a chart and watch the strategy trade, step by step. On the price chart, you'll see the blue line weaving through the candles. That's our 50-period EMA, the trend filter. Below the price, you'll see a subpanel labeled momentum over ATR, which measures the 4-bar price change divided by the average true range. The two dashed lines in that panel sit at plus 1.5 and minus 1.5. Those are our thrust thresholds, set by the thrust multiple parameter. A reading above the upper line means a strong upward push, and a reading below the lower line means a strong downward push. Let's start on the left. The first few candles are quiet. Price is hovering just above the EMA, and in the subpanel, our momentum reading is small and positive, drifting well inside the thresholds. The market is moving, but not with conviction, so the strategy simply waits. Nothing qualifies yet. Then watch the fourth candle. Price surges upward in a single strong bullish bar that closes near its high, well above the EMA. In the subpanel, the momentum reading leaps above the upper dashed line, past plus 1.5. Now all three conditions are satisfied at once. Price is above the EMA, the 4-bar momentum has exceeded 1.5 times ATR, and the signal bar closed bullish. This is where the buy entry marker appears. The strategy opens a long position, and at the same moment, it places a stop loss 2 ATR below the entry and a take profit 3 ATR above it. Notice the geometry here. The take profit target sits farther away than the stop, so the trade is structured for a reward larger than its risk, roughly 1.5 to 1 on the default settings. Now follow the next candles. Price continues to climb, bar after bar, riding the very momentum the strategy detected. 2 candles later, price reaches the take profit target above, and the long trade closes in profit for this illustration. That's the continuation idea in action. Join a strong move and let it run toward a predefined target. Now the picture changes. After the peak, price stalls and begins to roll over. A couple of candles drift lower, and importantly, price slips back below the EMA. Our trend filter has flipped from bullish to bearish. In the subpanel, the momentum reading falls from positive territory, crosses zero, and keeps dropping. Watch the strong bearish candle that follows. It closes near its low, while beneath the EMA, and in the subpanel the momentum reading plunges below the lower dashed line, past minus 1.5. Once again, 3 conditions align. Price below the EMA, downward momentum exceeding 1.5 times ATR, and a bearish signal bar. The sell entry marker appears, and the strategy opens a short position. This time the stop loss goes 2 ATR above the entry, and the take profit sits 3 ATR below it. From there, price keeps sliding lower across the next candles, driven by the same downward momentum the strategy measured. A few bars on, price reaches the take profit target below, and the short trade closes for this example. So in one clean sequence, you've seen both halves of the strategy: a long entry when price thrust above the trend, and a short entry when price thrust below it, each with a stop and a target scaled to volatility. What matters is that the strategy never chased the quiet candles at the start. It only acted when momentum genuinely exceeded its ATR-based threshold and the trend agreed. Of course, not every real signal reaches its target. Markets can reverse after an entry and reach the stop instead, which is why risk control is built into every trade. This illustration is simplified for teaching, and it's educational information only, not a recommendation. And that brings us to the end of our breakdown of the Momentum Thrust Continuation Expert Advisor. Let's quickly recap. We saw how the strategy uses a 50-period EMA to define the trend, how it measures momentum as a 4-bar price change, and how it compares that momentum against a multiple of the average true range to decide when a move is strong enough to join. We walked through both the buy and sell logic, the ATR-based stop loss and take profit, and we watched it all play out on a chart. Everything here has been educational information only, and nothing in this video is financial advice or a recommendation to trade. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.